Hey everyone, Fubo TV reported quarterly financial results that sent the stock price down almost 10% after those announcements were made. Of course, coming into the quarter, I told investors to avoid Fubo stock. I had Fubo stock rated as a sell. I've had Fubo stock rated as a sell for several years now, and I've been telling investors that the business model of this business is flawed and it has little chance of success. So let's review those quarterly results and let's see if Fubo actually made some changes that makes me more confident in this company's longer term future.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, like I mentioned, the stock price is down 9.68% as of this recording following the investor update. And like I reminded you all, I had Fubo stock rated as a sell, and I last updated that recommendation on April 16th. I've been following this stock for several years now, ever since the price soared to over $60 per share. Even before then, I had been advising investors to avoid this stock. The fundamental underlying the business is flawed, and I'll talk a little bit more in the video about why I think that's the case. And I'll discuss why I didn't upgrade the stock even at $1.40 per share, or even at prices that are, more than 90% below the peak valuation. I've continued my sell recommendation. So let's take a look at the numbers first. All right, so Fubo said that they once again exceeded expectations with North America revenue and subscriber growth of 24% and 18% respectively. That's solid. That did exceed expectations, and that was better than I expected. Fubo had been raising prices, although not enough. I thought Fubo should be raising prices on their subscription plans even more. But I wanted to see them raise prices and maintain customer growth. I wanted to see how many customers stick around after Fubo raises prices. And this is just the beginning. I think they need to do significantly more price increases. And then as investors, we need to look at how many customers stick around after Fubo raises prices enough where the business can be sustainable. At its current price, I don't think the business is sustainable, and we'll see more of a look into that. So they highlighted that their disciplined approach toward managing costs resulted in a significant further reduction in operating expenses as a percentage of revenue and improved gross margins. That's true. They did make progress in reducing the losses on the bottom line. The difficulty is that they're not progressing fast enough. When you're losing this much money and when you have the amount of money that Fubo TV has, you're limited in your time. You've got to make faster progress. You don't have all the time in the world because you're bleeding cash and you have a limited amount of cash. And you can't continue going back to investors and asking investors for more money because investors have already put in roughly $2 billion into this business, which Fubo TV has mostly spent already with little to show for it. Little to show for it because of the type of content that it spends its money on. It's unlike Netflix. When Netflix spends $2 billion on content, when it creates that content is on the Netflix platform forever. And so when Netflix spends $2 billion, it's building the business. When Fubo TV spends billions of dollars on content, it's passing by. It's not there anymore. It spends money on sports that it shows once, and then that's it. It's done deal. People are not going to go back and watch a sporting event from 3 months ago or 6 months ago or 9 months ago. And Fubo TV doesn't own the rights forever. It doesn't create this sports content. Some of its content that it's creating, it does own the rights to. Some of it, right? A small fraction of it. Most of the content that it pays for is just to show it for once or twice or whatever the season might be, and then it's gone. And it's not really building a foundation to build a business on, unlike Netflix. Now, the reason I'm comparing to Netflix is just to provide a contrast. I know Netflix is not Fubo's competitor. Fubo's competitors are Hulu Live TV and YouTube Live TV. which have much more, millions more subscribers than Fubo TV does. All right, so Fubo TV is having difficulty in the marketplace, and then you've probably already heard that the Walt Disney Company, Fox, and Warner Brothers are collaborating to launch a sports-only streaming service. And of course, Fubo TV targets sports viewers. Should this streaming service come into the marketplace, it's going to be devastating for Fubo TV. And because Fubo TV doesn't really have any market power, it can't really do anything in response. Like, it can't say, okay, we're going to cut price, or we're going to do something because we actually have some power in the market. They don't. They're just so small, and they don't have the content rights. They don't have the relationships with sports leagues that these others have built over the decades. And so all they could do is go complain. And so they've complained to the courts and saying that they filed a lawsuit saying that it's unfair that these three are teaming up because it's going to hurt us. And it's unfair if people do things that hurt us in the marketplace. And it remains to be seen what the courts will decide, but it's not going to be good for Fubo because they don't own the content rights. Let's say the courts decide in Fubo's favor and cause these three not to team up in response. Fubo has relationships with Disney, right? They buy content rights. They, have relationships to show these channels on their platform. How interested do you think Disney will be in dealing with Fubo after after they're suing Disney? You think Disney's going to want to sell ESPN to Fubo after this lawsuit? Or if it does sell ESPN to Fubo, it'll say, all right, your price has just gone up, right? You don't like it? Don't buy it, right? And if you don't have ESPN, are you really a sports first streaming provider? So I don't like the competitive position that Fubo is in. Regardless of the outcome of this lawsuit, I don't think it's going to be good for Fubo. One way or the other, it's not going to be good for Fubo. All right, so the company did reiterate its progress towards achieving positive cash flow and adjusted EBITDA in 2025, with improvements in 18 million in Q1 free cash flow and 10 million compared to Q1 2023. That's not very much improvement. And later on down, when they forecast the rest of 2024, they're now making their forecast excluding the impact of that sports first streaming service, excluding that impact. So if that streaming service does come into market, that teamed up streaming service, that's going to hurt Fubo TV. And I wouldn't be surprised if these forecasts of positive free cash flow and adjusted EBITDA in 2025, I wouldn't be surprised if they're removed, if they're taken away after that market, that streaming service enters the market. So one thing I was impressed with Fubo in the quarter was that they increased the number of subscribers by 18% to 1.511 million. But that looks to be a temporary thing. And let me share with you why. So in their guidance for the second quarter of 2024, Fubo is saying that their subscribers are going to fall back down to 1.285 million at the midpoint. So they're going to lose those subscribers that they added here, and they're going to go back down to this 1.285 number. So this is a temporary blip because of some sporting event it looks like people signed up for, and then they're canceling their service and going back to previous levels. Average revenue per user did jump by 10% to $84.54 after the company raised prices, and they need to raise prices by way more, like $25 to $50 per month more, just to sustain the business. And let me share with you why that's the case. So here's the underlying factor about the business that I absolutely despise and I would run away from. I do not want to invest in this kind of business. Subscriber-related expenses as a percentage of overall expenses in the first quarter of 2024 were 90%. 90%. That means each subscriber that Fubo TV adds, the payment, 90% of it goes away. 90% of it goes away because Fubo has to pay the content owners Fubo has to pay the content owners like Disney and others that own these sports rights, because Fubo doesn't own them. Fubo has to rent them from these other companies. And that's barely improved from 93% in the first quarter of 2023. Barely improved, right? So if your business pays so much just for that thing, it has little room to generate profits, because now you've got to have all of these other costs on top of just the subscriber related costs, that it makes it very difficult to run a profitable business given this high level of cost. So its cash flow from operations in the 3 months that ended March 31st were negative 67 million. And that was up barely from 78 million negative in the same quarter the prior year. So they made an 11 million improvement. It's not enough. It's not enough for a company that has, so they're losing 67 million in the most recent quarter, right? And as of March 31st, the company only has 168 million in cash. 168 million. And they lost 67 million. So you could do the math here. How much longer can they go losing 60, 70 million every quarter? Right? They need to make faster progress. This 168 million is going to run out real quick. 2.5, maybe 3 quarters before they run out of this money. And so they need to go back to investors and say, please give us more money. We just lost a lot more. Investors are growing tired of that story of we just keep losing more and more and more and more and more. And now with this competitive threat from Disney, Fox, and the other company, I forget, that are coming out with the sports first streaming service, there's going to be a limited amount of investor appetite to give them more money after they've lost so much to begin with. They've already lost nearly 2 billion since their existence, and now they're facing this existential competitive threat. I don't think investor appetite's going to be very strong. So I guess you could have told from the tone of that entire video that I'm keeping Fubo stock rated as a sell. I'm not upgrading this stock. I would not want to buy this stock even at current valuations. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.